I want to start by saying I'm in awe of the people here and the information that has been presented. I just feel so honored to be part of this. I have a PowerPoint slideshow, and I don't think I'm going to have time to get through the whole thing. Basically, I usually start my presentations with the big picture as I see it, and then a brief description of the dimensions of the problem, then go into the solutions that I have discovered and come up with. But I'm going to skip through most of these pretty quick to get to the solutions and make sure we have time to discuss those. Anyway, I'm talking about civilization on the brink. You know, we are really on the brink with general disruption of all of our institutions, with climate change and all of the other things that I've listed on that first slide. But, you know, we have an option here. Are we going to end up fighting over the last resources available, or are we going to find a way to come together as one human family and provide a satisfying and equitable way of living together? Anyway, Alvin Toffler talked about 3 waves of civilization, and he's talking about the 3rd wave now emerging. I call it the Convivial Society, or the Convivial wave of society, or the Butterfly Society, which is now emerging. And the industrial era is clearly at an end, and the world is going through a metamorphic change. And I like this metaphor of the butterfly from the caterpillar, because I think that's pretty much what we're seeing happening. You know, when the caterpillar is done eating and consuming and growing, it stops and it forms a cocoon or a shell. And the caterpillar body disintegrates inside that shell. And there were within the caterpillar body the whole time what biologists call imaginal cells. And those imaginal cells start coming together and multiplying and begin to form the new butterfly body. And they feed off the nutrients that the caterpillar accumulated that have disintegrated into a soup within the cocoon. So we're seeing the old world order was based on a set of beliefs that are now passing. The new convivial world order, as I call it, is based on beliefs in human unity, the oneness of all life, abundance. There's plenty to go around, as Gandhi said, plenty enough for everybody's need, but not enough for everybody's greed. There's belief in nonviolence, sharing and cooperation, collective intelligence, self-government and community, the potential for human improvement, and I do believe that humans have been evolving and continuing to evolve. And when we look at the economic aspect of this transition, these are the things that the old caterpillar economics promotes, the consumer society. The butterfly economics is entirely different. It promotes steady state economic output, the end of endless growth, qualitative measures of value and well-being, the common good, restoration of the commons, resource productivity instead of labor productivity, sharing, ecological regeneration, and more equitable distribution of wealth and power. That's what I call the convivial society. Well, I discovered a long time ago that what's driving the caterpillar economy is a money system based on lending at compound interest. Now, if you consider what compound interest involves, it's an exponential growth function. And the enabler is the availability of cheap fossil fuel energy. The brake, of course, is nature, which says that you cannot continue growing exponentially in anything. So the money power is supreme, and here are just a couple quotes. I've got dozens of them. James Garfield, who was president of the United States for 4 months before he was assassinated, said, "Whoever controls the volume of money in any country is absolute master of all industry and commerce." And this is a former president of a Midland bank in England. He said, Those who create and issue money and credit direct the policies of government and hold in the hollow of their hands the destiny of the people. So the political money regime is dysfunctional in several ways. A large proportion of the money that's issued by banks is improperly issued, not on sound collateral. It goes to the wrong people or the wrong companies. Instead of going to the SMEs, the small and medium-sized enterprises that are the backbone of any community economy, it goes to government, central government, and large corporations. It costs too much. Banks charge interest on the money that they create. It's manipulated for the benefit of its controllers, creating a power elite and a super class. It centralizes power and concentrates wealth, undermines democratic government, creates inequity and class conflict, and it forces this artificial growth that I mentioned. Now, Warren Buffett, a well-known investor and fund manager, says, there is a class war all right, and it's my class, the rich class, that's making war, and we're winning. This was quoted in the New York Times in 2006. So we're seeing amongst ordinary people, the middle class, reduced incomes, increasing cost of living, destruction of our savings, and political attacks on social programs. Now in this diagram, I want to show how money is actually created. And John Kenneth Galbraith, the noted economist of the 20th century, said, the process by which banks create money is so simple that the mind is repelled. And I see this every time I give a talk. People, it's not that they can't understand it, it's just that they can't believe it. But this is the way it works. You go to a bank and you say, I want a mortgage loan to buy a house. Well, the bank will create two entries on their books. On the asset side will be the mortgage note that you sign. It says, I owe the bank a certain amount of money. And on the liability side is an account deposit that the bank creates and credits to your account. So with two entries on the books, the bank has created money. And this is the way virtually all of the money gets created in our world today. It's not only in the United States, it's all around the world. And all of the banks around the world collaborate in what I call a banking cartel. So the interest-based money regime compels continual expansion of debt because there's never enough money in circulation for everybody to pay what they owe. The only way money is created is by banks making loans. They create the principal, but they don't create the interest. So as time goes on, the amount due on a loan increases exponentially. Now, when you take a mortgage, of course, you're paying a little bit at a time. But by the time you're finished paying off the house, you've paid for it 2.5 or 3 times over. So we have this continual expansion of debt. We have boom and bust cycles. The managers of this system have to choose between inflation or depression, sometimes giving us both at the same time. We end up with a concentration of wealth and power. And here's one thing that most, in fact, virtually all conventional economists do not acknowledge or don't even recognize is the fact that national governments assume the role of borrower of last resort. You know, they talk a lot about the central bank being the lender of last resort, but who is the borrower of last resort? It's the national governments. Now, this shows, this is a chart of debt growth for all sectors, and you can't read the numbers too well, but basically it's exponential growth of debt across the board. And this is the US government debt growth. This is a sovereign debt growth. And you can see it's going astronomical. And government deficits are now going even larger as time goes on. So the managers of this system are between a rock and a hard place because this cannot continue indefinitely. The good news is that money is being reinvented and transcended. And this is what I've been writing about. I wrote my first book on this in 1989, and the most recent book, The End of Money and the Future of Civilization, came out in 2009. So this is the key, actually. We've got to reclaim control of money and credit. Because money is, excuse me, basically credit. And the purpose of money is to facilitate reciprocal exchange. We allow the banks to basically control our credit and decide who's going to get it and on what terms. So by taking credit back, we can reclaim our power and rebuild our communities. There are two basic approaches to doing this. One is private alternative currencies. Another is trade exchanges, sometimes called barter exchanges. And there are many commercial trade exchanges operating around the world. Both of these approaches can provide SMEs, small and medium-sized enterprises, and their local economies with reliable sources of credit. Banks are not reliable sources of credit, especially when you get into a little trouble. Supplemental payment media in a different form. Instead of using dollars, we can use our own payment media. And these payment media are based on something real, unlike dollars, which are often not based on something real. So this is the reciprocity circuit that is the key to understanding this. I've got three sectors here that I outline. On the right, you've got business or municipal issuers of a currency. They will issue a currency into circulation by paying their workers and suppliers with their own private currency and get the labor, services, and supplies in return. Now, of course, the workers and suppliers, they need to get what they need by using this currency. So you get the local merchants involved in the process, and they will provide their usual goods and services to the workers and suppliers who accepted the private currency. And of course, in that diamond-shaped section that represents the merchants, you can have the continual circulation of this currency within that segment a number of times before it comes back to the issuing business, where it will be extinguished, and the business will redeem it for the goods and services that it normally provides. So this is the basic reciprocity circuit that has to be completed in order for any currency to be valid. Now, this is not pie in the sky, it's old hat. There are many cases in history. I've just selected a few of these. On the upper left is something called Larkin merchandise bonds. During the Great Depression of the 1930s in the United States and other countries around the world, the problem was not any problem of the economy. We still had adequate, well-trained labor. We still had factories. We still had farms that were capable of producing. What we were lacking was sufficient media of circulation, sufficient money. And that was because the banks put a clamp on the issuance of money and on the allocation of credit. So many communities around the country found their own ways of dealing with this. There were numerous issues called stamp script, and Irving Fisher, the noted economist of that era, wrote a book about stamp script. This Larkin merchandise bond is not stamp script. It was basically a single issuer, the Larkin Company, which was operating a number of retail establishments in the Buffalo, Niagara Falls area of New York State. And they were in business and they had plenty of merchandise to sell. And on the strength of that merchandise, they said, okay, employees and suppliers, will you accept our merchandise bonds, which you can then redeem at our store for anything you want? So they circulated successfully for a number of years. And that was a good example of how private enterprises can issue their own currency, which will be accepted in the market and circulated. On the right side, you've got Canadian Tire money. Canadian Tire money has been issued since 1958 by the Canadian Tire Company. This is a chain of stores. They do more than tires. They sell a wide variety of merchandise. this is a rebate currency, and this is one way of issuing a currency. When you go to a Canadian Tire store and you spend $100, they might give you $2 in Canadian Tire money, which you can then use on your next purchase just as cash. On the lower left, there are a number of currencies represented. During the mid-1990s and early 2000s, Argentina was in a difficult situation economically. In response to that, a lot of people started organizing treke, or trade clubs, and there were hundreds of these trade clubs that sprung up, and each one was issuing their own currency notes. And I was there in 2001, and there were trading fairs in old warehouses and factories that weren't being used, where people were coming by the hundreds to share what they had to offer and accepting these treke notes in return. The other method of issuing credit is a collective method where we organize an association, a credit clearing association, which is populated by two types of members. I distinguish between issuing members and non-issuing members. An issuing member is a member that can spend before they earn. A non-issuing member has to earn before they spend. It's like if you have a line of credit at a bank, you can overdraw your account. If you don't, you can't. So it's the same way here with our Mutual Credit Clearing Association. The way it starts is one of the issuing members, one of those represented by the green smiley face, makes a purchase and issues credit in return. Now, those credits can circulate any number of times within the association before they eventually come back to the issuer to clear their balance. So an example, a historical example of a successful credit clearing association was organized in Switzerland, again during the Great Depression. It was called the Veer Business Circle Cooperative. Veer is the German word for we, but Veer is also an acronym that stands for some unpronounceable German phrase, which I won't try to tell you. Anyway, they started in 1934, and they were growing by leaps and bounds until the mid-1990s, and eventually, at that time, Veer became a conventional bank. So much of its business today is done in Swiss franc loans and repayments. But the Veer still continues as a credit clearing operation, and there are 60,000 small and medium-sized businesses that participate using Veer credits as their clearing mechanism. And the Veer Bank now clears about $2 billion worth of trades annually. We also have scores of commercial trade exchanges that do this credit clearing process. Typically, they recruit businesses within a community. They might have anywhere from 300 to 3,000 or more business members that participate in this moneyless trading approach. So these are just a few of the trade exchanges that I selected their logos from the web. The IRTA is the International Reciprocal Trade Association. It's the trade association for this commercial barter or trade exchange business, and they have done a tremendous job in government relations, in publicity, in helping the whole industry to thrive. And so I guess I will finish with this list of resources which I ask you to consult to get deeper into this and educate yourself about these approaches. But it's a paramount importance that we reclaim control of our credit and create our own local medium of exchange. Without that, I don't think we're ever going to be able to gain sufficient political power to really change the governance system in this country. So thank you. Do you have time for questions? Yeah, if anyone has any questions, I'll try to answer them.
have one.
Yes.
I had seen like it's like a dollar bill, but it has like gold in it, and I guess it's being traded within 13 states.
I'm sorry, can you speak louder?
There's a dollar, like it looks like a dollar bill that I seen, and it's being traded in about 13 states. And I didn't know if you had heard anything about that. I had just heard about it recently.
There are lots of paper currency notes that are being circulated here and there. Yeah, I don't know that particular instance.
Yeah, that's what I'm saying, where each state has their own, and each state can get their own, and then some of the states are actually...
These are issued by the state government?
Pardon?
Are you saying these are issued by the state governments?
I'm not sure who they're being issued by exactly. I just saw something about it recently. And
yeah.
I don't really know that much about it, but it looks like it might be another alternative to the dollar bill.
Yeah, well, the important thing about any currency, whether it's issued as paper notes or in digital form, is that it be backed by goods and services of the issuer. The way I state it is that whoever issues a currency must be ready, willing, and able to redeem it in goods and services that they provide on a regular basis. And those goods and services have to be goods and services that are in regular demand every day. Yes.
Short of emergencies, what do you think could really get this ball rolling?
Well, the ball has been rolling for a long time. It's just a matter of educating people. We don't have to have an emergency. An emergency situation can stimulate action. More and more people are asking questions of me about these other approaches to alternative exchange, and I'm probably more in demand now as a speaker than I ever have been. Yeah.
What are your thoughts on the belief that money should be backed by some sort of commodity, like gold? And then the second part of that question is having that commodity be something that's speculated on.
There is no need for any additional backing other than the goods and services upon which the currency is issued. One of my mentors was E.C. Regal. I never met him because he died before I ever heard of him, but I learned more from him than from any other source, and his books are on my website. You can find free downloads. He said gold is just window dressing, and I agree with that. Yes?
Forgive me if this is a foolish question, but with Weir's model, what's the difference between what Weir was doing at the beginning and like your typical Ponzi scheme?
Well, a Ponzi scheme is an entirely different thing.
Well, I understand. I guess what I'm saying is, and maybe I'm just ignorant to the fact, but it seemed like the credit moving around person to person kind of seems similar to that of a Ponzi scheme.
Well, it may appear that to you, but it's nothing like it.
Okay.
A Ponzi scheme is something that has no backing. You know, the original Ponzi scheme was, you lend me your money and I'll guarantee you a 20% return. Well, the only way they can keep that up is if they keep getting new suckers in to give them money. This is nothing like that.
Okay. I'm actually going to do that one here. Thank you.
Okay, thank you.